Good night, Papua New Guinea. I'm Malcolm Wyra, and welcome to our first episode of Infocus for 2025. Tonight, we hold discussions with AML-EC, a software company that offers services that ensures the compliance with anti-money laundering laws and practices in the PNG and the Pacific. Joining us for discussions is Ms. Amira Ward, Director for AML-EC Limited, as well as Ms. Margaret Parua, who is also a Director at AML-EC Limited. Ladies, thank you for joining us.
Thank you for having us, Matt.
Thank you.
Firstly, Amira, what sorts of financial transactions would constitute money laundering?
Okay, so firstly, again, thank you for having us on your program, Malcolm. Margaret and I are very happy to be here. Before we can identify money laundering transactions, we need to first understand what money laundering is. So Section 508B of the Criminal Code Act, it sets out that the crime of money laundering is when a person deals with property that is criminal property and who knows or reasonably ought to have known that that property is criminal property. So there's a lot to break down there. Criminal property is money, digital currency, bank deposits, bank checks, shares, debt instruments such as promissory notes. It's also title instruments, so share certificates or state leases, and it's property that's derived, obtained or used in connection with criminal activity or proceeds of criminal activity. It's very wide. It's money that's basically intercepted in a criminal activity. So to deal with criminal property is to receive or sell that property, to transfer or cover or disguise that property. And it's essentially changing the nature of the property from being criminal to legitimate, which is what is meant by the term laundering, because it's changing the nature of that property. It's cleaning the property of its criminal aspects. Yeah.
From your perspective, how much of an issue is it for the global community?
It's a huge issue for the global community. It has been for years, and it's becoming increasingly more important to deal with money laundering and countering terrorist financing. It's becoming very important.
Now, Margaret, are there specific steps used in the practice of money laundering?
Yes. Individuals who wish to money launder are always looking for legitimate purposes to disguise their criminal property. They may set up companies because companies need funding to start up and operate. They may purchase real property or businesses to mask the criminal property. When they sell that property or business, the money from that sale appears legitimate. Highly profitable cash businesses are therefore considered high risk. In terms of banking transactions, one of the ways they try to avoid detection is by staggering a sequence of payments. They might have 5 or 10 or more payments which individually may not attract attention, but together their value is considered high risk.
Now,
Amira, could you highlight some of the common methods used in the process of money laundering?
Yes, sure. So Margaret has already mentioned some of them, but essentially setting up companies, buying businesses, pooling money together to finance a company's operations, or to purchase an asset or to raise capital by issuing new shares. These are all ways. There are so many different types of transactions that could be used to make criminal property appear legitimate. Transactions involving multiple jurisdictions is also another high-risk activity, because one of the ways in which people money launder is to send money overseas. And it's hard to trace those payments when they're going from jurisdiction to jurisdiction. So lawyers and accountants acting in transactions regarding certain activities, real estate agents, car dealers, jewellers, finance companies, savings and loan societies, super funds and fund managers are considered designated non-financial businesses and professions, or we call them DNFBPs. So lawyers, we are considered the gatekeepers because we're typically at the helm and we're guiding or driving these types of transactions. And as a result, our position and our knowledge and our expertise can be easily abused, and our trust accounts can be used to deal with criminal property. So this means that we're exposed to a higher risk of money laundering, and so we have to make sure that DNFBPs and other financial institutions do comply with their obligations under the AML-CTF Act.
Thank you, Amira. We now go for a quick break. Join us at the other side for more discussions. Welcome back. You're watching Infocus. Now, Amira, how has PNG performed in terms of addressing money laundering? And from what I gather, PNG is about to be grey listed based on the FATF assessment.
Yes, so Malcolm, first we just want to say that AML-EC is not affiliated with FATF or with FASU in any way. We're an independent private PNG registered company and we're mostly PNG owned. However, we're happy to share our knowledge and our information where PNG sits with the FATF grey listing. So the Financial Action Task Force, or FATF, is a global intergovernmental body and which implements legal and other measures to combat money laundering and terrorist financing. So it has 9 FATF-style regional bodies all over the world, and PNG is a member of the Asia-Pacific Group on Anti-Money Laundering, or we call it APG. So FATF placed PNG on its grey list in 2014-2015. In response, PNG introduced legal framework reforms by introducing 5 pieces of legislation, which included the Anti-Money Laundering and Counter-Terrorist Financing Act of 2015. So as a result of the legislative reforms, we came off the grey list around 2016. APG and FATF then assessed PNG in 2023 and produced a report in 2024. It assessed PNG for its AML-CTF technical compliance and the effectiveness of our AML-CTF regime. The assessment was based on 40 FATF recommendations and 11 outcomes to measure effectiveness. So FATF found that in respect of its 40 recommendations, that PNG was compliant in 4 areas, largely compliant in 13, partially compliant in 21, and non-compliant in 2 areas. Partially compliant means that there are moderate shortcomings in complying with that particular recommendation. So there is a lot of work to do there, and the effectiveness of PNG's AML-CTF regime is a way to measure the extent to which the desired outcomes are achieved. So we rated low in 5 out of 11, and outcomes and only moderately effective in 5. So PNG did not rate substantially or highly effective in any outcome area. This means that our AML-CTF system needs major and fundamental improvements. So our system is not very effective in detecting or prosecuting or tracing money laundering. As a result, PNG was placed on a watch list and has been given until October this year to address and reform various shortfalls in our AML-CTF regime. If those shortfalls are not rectified, PNG will be placed back on the grey list. There are many issues PNG needs to address to avoid being relisted on the grey list. One of the biggest issues that we face is that the police and the Office of Public Prosecutions are underskilled and under-resourced. So the police are not investigating and the OPP are not prosecuting money laundering crimes. Or enough of them, I should say. The police are not confiscating enough proceeds of crime as well. And we're informed that PNG will most likely, unfortunately, be placed back on the grey list, or at least it's a very real possibility. Because, funding and training police force, it's not something that can happen quickly or overnight. Certainly, if there are changes to legislation that are required, these things take time, and they can be done, but they take time. I just want to make a point that FASU is doing absolutely everything it can in its power. It's doing an excellent job, and that if anyone wants any additional information regarding the grey listing, they should go to the FASU website or the FATF website for more information.
Now, in the event that PNG does become grey listed, how will this affect PNG's economy and finance, as well as the possible resource projects down the line?
If PNG is grey listed again, it will tarnish our reputation in the global financial system. It will have a negative impact on PNG's economy, businesses, and resource projects. The impact could be severe, leading to higher costs for trade and financing, and a loss of trust from foreign investors. This would be damaging for our businesses and our country. There will be less foreign exchange and much more competitive process in accessing forex. This will cause delays in sending money overseas, which will affect trade payments. Businesses and even the government may default on loans as a result. Overseas lenders will be less inclined to finance resource projects. There are a few reasons for this. Firstly, international banks will have to exercise higher due diligence in dealing with PNG banks. There will be delays in processing times. This, of course, drives their costs up. Secondly, the country will be considered a high-risk jurisdiction. Insurance companies will want to reduce the risk of insuring projects located in PNG by increasing their premiums. Lenders then pass on these costs to their borrowers. So defaulting on multi-million-dollar loans carries significant interest. Payment of dividends are usually low on the list of priority in accessing forex. All these factors actually prevent foreign investment. So less foreign investment equals less foreign currency and a weaker economy for PNG. So come October 2025, FATF decides to grey list Papua New Guinea. At least with the European Union Commission, it will affect us in the following ways. One, there'll be increased scrutiny. That means PNG will face heightened scrutiny regarding our financial systems. This can lead to more rigorous evaluations of their compliance or our compliance with EU regulations and standards, which may delay or complicate financial support for PNG. Number two, there'll be conditionality of assistance. Financial support from the European Union may become conditional on PNG demonstrating progress in addressing the deficiencies that led us to grey listing. The EU may require the implementation of specific reforms or action plans as a prerequisite for funding. Number three, investor confidence, of course. Being on the FATF grey list can diminish investor confidence, making it harder for PNG to attract foreign direct investment. This can directly affect our economic stability and consequently our eligibility for EU support. Fourthly, access to EU programs. Some EU funding programs may prioritize countries that exhibit strong compliance with AML and CTF measures. Grey-listed countries like ourselves might find it challenging to access certain programs of funding mechanisms. Fifthly, technical assistance. While grey-listed countries may still receive the technical assistance, from the EU to help them improve their compliance. Such support might be focused on addressing specific deficiencies rather than broader financial aid. Sixthly, reputation and relationships. The grey listing can affect our overall reputation in the international community, which can have broader implications for our bilateral relations with EU member states and other international organizations. Overall, the grey listed countries may still have access to some EU support. The conditions and nature of that support are likely to be more stringent and focused on ensuring compliance with international standards. So as we all know, we get a lot of support from the European Union Commission. So this is very important for us to stay off the grey list so that we can continue the support that we normally get from EU Commission.
Thank you, Margaret. We now go for a quick break. Join us on the other side for more discussions. Welcome back. You're watching In Focus. Now, Amira, what are the main features of the AML-EC software?
Okay, so the AML-EC software is a tool. It's a report generating tool, and it produces two compliance documents. The first is a Know Your Customer report, or a KYC report. And based on the answers that you give to various questions, the software will determine for you whether that particular matter or transaction, you need to do a simplified, a standard, or an enhanced due diligence. So at the end of the KYC report, we set out all of the required identity and verification elements. It's a very simple, easy to use checkbox, and the user actually must complete the checkbox in order to comply with the legislation. So the KYC report actually doubles as a training tool, and it's an internal control measure because it's based on the obligations under the Part 2 of the Act. The feature is particularly useful for all DNFBPs and financial institutions, but particularly in larger organisations as well, because it can safeguard against potential gaps in their staff training for AML CTF compliance. The second document is called a risk assessment form, and you'll be taken to complete a risk assessment form when the KYC report states that a standard or enhanced due diligence is required for that matter or transaction. So this is a really unique feature which we're most proud of because it allows the financial institution or DNFBP to assess the risk of money laundering for that particular matter or transaction. Our drop-down menus provide sample answers which the user can select, makes it very easy and saves a lot of time. The form will produce a snapshot also of the transaction and the risks involved. So it documents why you've proceeded to take on that customer or make the investment or clear the payment. It's an easy tool for managers to then review, to have a look at the type of transaction and why it proceeded. So it's also part of financial institutions and DNFBP's ongoing due diligence requirements under Section 17 of the Act. They must ensure that transactions are carried out on behalf of their client or customer, that they're consistent with their knowledge of that customer, their commercial or personal activities, and their particular risk profile that organisation has given to that customer. So our risk assessment report is able to allow the manager to analyse the information in the form and to build on that customer's risk profile, even reevaluate the customer's risk profile. And the information then can feed into their organisation's overall business risk assessment. So we think our risk assessment form is invaluable for customers or industries that their organisation is tracking or considers to be of medium or high risk. So after you complete the forms, you'll then have just a full compliance record, and it will demonstrate that at the very least that you've considered the AML risks associated with that client or that particular transaction. So this record, it can be relied upon in some circumstances, especially if your organisation is being investigated with the, alleged crime of money laundering. You may have unintentionally dealt with criminal property. In the worst case scenario, you might be prosecuted, and at least if you've assessed the risk, if you can demonstrate you've assessed the risk, you have something to show. Other features are that if a client or customer is listed on the UN sanctions list, you will not be able to produce a report or proceed. In some instances, you'll be alerted to completing and sending FASU a suspicious matter report, and we're currently integrating the form into our software so that people can fill that out, complete the form easily. And we also offer additional services, PNG Australian and Singapore company searches for an additional fee.
How does AML EC intend to safeguard the financial institutions and the financial system in Papua New Guinea?
FATF recently assessed PNG as having moderate shortcomings in various preventative measures. Areas involving politically exposed persons, reporting of suspicious transactions, DNFPB's record keeping and customer due diligence all need to be improved if we want to stay off the grey list. Once all of these recommendations concerns the regulations and supervision of DNFPPs by supporting DNFPPs comply with their obligations, we are helping to strengthen the financial system. The PNG financial system needs all the help it can get in terms of safeguarding against money laundering and staying off the FATF grey list. Everyone needs to play their part. Programs like ours offer practical tools for those at the forefront of financial crime. Commercial banks do most of the heavy lifting in terms of due diligence. If other financial institutions like finance companies, fund managers, etc., adopted our software, they would increase their due diligence. Financial institutions are only allowed to rely on other financial institutions to do their due diligence in very limited circumstances. There has to be no perceived risk of money laundering. How will a finance company argue that it had no knowledge of money laundering when there is no evidence that it considered the risks or conducted enhanced due diligence? If a majority of our finance institutions are conducting ongoing due diligence and assessing transactional risk, the strength of doing so will reduce the gaps in the financial system. This creates a stronger financial system because there'll be layers of safety nets.
Now, Amira, how compatible is the AML EC software with the local PNG legislations?
Yeah, so it's very compatible. It's based on Part 2 of the AML CTF Act. And we're in the process of adding some new features specifically for financial institutions. Look, the legislation, Malcolm, is really complicated. It's very difficult to understand, even for lawyers. So our AML EC software, it's designed to be simple. That's the whole point. It's designed to be easy and just to break down all of those obligations into a very simple to use program. I mean, ultimately, compliance is up to the financial institution or DNFBP, and the strength of their answers will account to whether they have actually complied or not. But we give them a guide to really break down the obligations under the Act. It's an effective tool to help with the compliance process, and it just really aids an organisation in its training as well. because it's very time-consuming and difficult for senior management to constantly train and retrain staff. And so this is another safety net. It's another layer of compliance that can be, it's a tool in the toolbox in a company's AML regime or compliance program.
Amira Ward and Margaret Parwa, thank you for joining us.
Thank you for having us.
Thank you for having us.
Well, viewers, that's all the time we have for this edition of Infocus. Do join us again next week Monday on our regular time slot of 7 p.m. Till then, bye for now.